Most passive income advice assumes you already have a massive safety net. Telling someone to buy a duplex or build a portfolio of dividend stocks is useless instruction when your bank account is sitting at zero. You cannot invest capital you do not have. When you lack upfront cash, you only have one currency available to trade. You need leverage. Today, we are going to build a complete cash flow engine from scratch. I will give you the exact blueprint to generate $1,000 a week using absolutely zero startup capital, and then show you how to automate it. But be warned, if you skip the final step in this process, the entire system will eventually collapse. Welcome to Minted Mosaics. Let's set a ground rule before we begin. True passive income on day one is a myth. Building this engine requires an initial, highly focused burst of sweat equity. You will trade a few hours of intensive work up front to lay the foundation. But once the architecture is set, you will transition out of the daily operations entirely, leaving behind an engine that pays you permanently. Here is step one. Physical real estate requires mortgages and maintenance. Digital real estate is dealt on attention, costing $0. Looking at this interface, it's simple. Using free platforms like Beehive or Substack, you launch a targeted newsletter for a specific audience, like remote workers. Your daily workflow is simply curation. You spend 2 hours a day aggregating the best tools, articles, and tips in your chosen industry. By doing the reading for them, you save busy professionals hours of their time each week. This strategy requires consistency to build an initial subscriber base of a few hundred or a few thousand readers. Once that list reaches a critical mass of engaged professionals, software companies and relevant brands will pay to reach that specific group through sponsorships and affiliate partnerships. This establishes a digital asset. The content system you curated continues to provide value to your readers 24 hours a day, capturing attention whether you are at your desk or asleep. With an audience in place, you need a way to extract more value without working more hours. Selling physical products requires inventory and shipping. Selling your labor hits a hard limit because there are only 24 hours in a day. You need a high-margin product. If you write a book, you do the heavy lifting exactly once. After the manuscript is finished, you can sell 10 copies or 1,000,000 copies without spending another dime on raw materials. This is a zero marginal cost asset. You can build these assets for free this weekend. You can use a free Notion account to design a project management dashboard. You can create specialized AI prompt libraries for real estate agents, or build automated budget trackers in Google Sheets. The entire process costs nothing. You design the asset using free tools like Canva or Google Box, and you host the final file on storefronts like Gumroad or Payhip, which charge no upfront fees. Let's pause for a moment. What is one specific software tool or specialized hobby you use every day that completely confuses other people? Drop it in the comments below right now. I am going to review the comments and give the first 50 people a tailored digital product idea you can build for free. Now you link these free-to-duplicate digital products directly to the newsletter audience you built in step one. Because you spend nothing to manufacture each new copy, every single sale is pure profit. Building an audience takes time. If you need to hit that $1,000 a week mark immediately, you have to bypass the slow growth phase. We do this through automated drop servicing. Think of yourself as a digital general contractor. A physical contractor does not pour the concrete or frame the walls themselves. They find a client who wants a house, quote a premium price, and hire specialists to do the actual labor for a fraction of that cost. You keep the difference for managing the project. Landing these contracts is the hardest part of the system. It requires consistent outreach on LinkedIn or Upwork to find businesses that need short-form video editing or customer service automation. You are offering them a flat monthly rate for a specific outcome, not your hourly time. Once a contract is signed for $1,500, you immediately route the technical labor to a vetted freelancer on Fiverr for $500, or you use advanced AI software to generate the deliverables yourself in minutes. Because of this high profit margin, managing just 2 or 3 of these clients can push your weekly income toward that $1,000 goal. You are being paid for your ability to connect a specific problem with a competent solution. Here is where the majority of creators fail. They hit their $1,000 weekly goal, buy a nicer car, inflate their lifestyle, and trap themselves in a high-income hamster wheel where they can never stop working. This chart shows why you must transition. Take active cash and funnel it into passive equity, or your income flatlines. We do this through index funds. Instead of guessing which company succeeds, an index fund lets you buy a piece of the global market. You open a standard brokerage account and systematically purchase low-cost ETFs, exchange-traded funds, that track the performance of the top 500 companies in the world. This pivot transforms your digital cash flow into a portfolio of assets that grow with the global economy. This is the final step in moving from trading time for money to letting your money work for you. There is one final rule to implement. If you stop here, you will be successfully investing your money, but you will still be bogged down answering emails and managing freelancers every day. To completely remove yourself from the operation, you deploy the 10% automation flywheel. You take exactly 1/10 of all profits from your digital engines and rigidly reinvest it into replacing your own labor. When your drop servicing business generates its first $1,000, you take $100 and hire a virtual assistant to handle the client onboarding. You take another $50 and subscribe to automated scheduling software. You systematically buy back your time. Your weekly workload drops from 20 hours to 5 hours to 0 hours. The cash continues flowing to your investment accounts, and you have entirely decoupled your time from your income. Let's review your roadmap. Step 1. Capture attention using zero-cost curated newsletters. Step 2. Monetize that audience with highly scalable, zero-marginal-cost digital products. Step 3. Accelerate your initial cash flow by drop servicing high-ticket outcomes. Step 4. Funnel your new profits into broad market ETFs. Step 5. Buy back your time using the 10% automation flywheel. But having thousands of dollars pouring into your brokerage account is completely useless if you pick the wrong assets. Hidden investment fees and inflation will quietly destroy your capital if you don't know exactly what you are buying. To ensure your money is protected, you need to know exactly which funds to buy. Click the video on your screen right now to discover the 3 essential ETFs every beginner must hold to build a portfolio that grows with the world's most successful companies. Click it right now and let's secure your financial future. Standard financial advice often suggests building passive income through rental properties, dividend stocks, or high-yield savings accounts. These are effective strategies, but they share a common requirement: significant upfront capital. If your bank account is currently at 0, you cannot invest money you don't have. To build a cash flow engine from scratch, you have to replace capital with leverage. We are breaking down a specific $0 blueprint to generate a recurring $1,000 a week, and the steps required to automate the system so it runs independently. This process requires an initial investment of 2 to 3 hours of daily effort, using free digital platforms to build assets that eventually scale beyond your manual input. The goal is to trade a short-term burst of focused labor for a long-term asset that provides recurring revenue without ongoing daily management. In the physical world, real estate requires a mortgage and maintenance. In the digital world, real estate is attention. This digital interface represents an asset you can build for $0 using existing online platforms. Step 1 is launching a curated newsletter in a high-value niche like AI tools or remote work, using free publishing platforms like Substack or Beehive. Your daily operation is aggregation. You spend your time finding the most valuable industry news and tools, saving busy professionals the hours they would otherwise spend searching for this information themselves. You generate recurring revenue by integrating affiliate partnerships with software companies into your newsletter. When your readers sign up for a tool you've curated, you earn a commission. This is possible because digital products have 0 marginal cost. Once the initial product is created, you can distribute 10 copies or 10,000 copies without increasing your production costs. You can build these assets for free using tools like Notion or Canva, a project management dashboard, a curated library of AI prompts, or a specialized budget tracker. By hosting these products on free platforms and linking them to your newsletter, you capture the full profit margin of every sale. While this model avoids capital risk, it requires consistent quality to compete for attention. Success here means creating a system where your earnings are no longer tied to how many hours you personally work. The challenge with building an organic audience is that it takes time to reach $1,000 a week. If you need cash flow more immediately, you can use a different form of digital leverage. This flowchart represents automated drop servicing. In this model, you act as a digital contractor, fulfilling existing market demand by connecting businesses with specialized services. You identify high-ticket demand for services like short-form video editing or SEO writing on platforms like LinkedIn. You agree to deliver the final result to the client for a professional fee. You then hire vetted freelancers to perform the actual labor at a lower cost, retaining the difference as profit. You aren't selling your time, you're selling the successful completion of a project. You use free automation tools to handle the file transfers and communication between the client and the freelancer, allowing the process to function with minimal manual oversight. By separating client acquisition from the technical labor, you can manage multiple projects simultaneously without being limited by your own personal skill set or schedule. Many people start making money online but immediately increase their spending, which keeps them dependent on their daily work. To move from active cash flow to lasting wealth, you must funnel your profits into ETF index funds. This chart shows the difference between staying flat with active work and building an exponential curve through compounding. An index fund is a diversified asset that gives you a small stake in hundreds of the world's most successful companies. Historically, this has been a reliable way to ensure your capital grows with the global economy. To ensure your digital business doesn't become a full-time job, you need to implement a final system, the 10% automation flywheel. The rule is to reinvest 10% of your profits into systems and assistants. You use this money to hire a virtual assistant for curation or to pay for software that automates your client outreach. This strategy systematically replaces your labor with systems. It is the process of moving from 20 hours of work per week toward a goal of 0 hours of manual labor. Long-term stability is the result of converting your initial digital hustle into automated business processes and diversified market equity. You now have the full roadmap: building digital real estate, selling zero-cost products, utilizing drop servicing, and automating your operations through reinvestment. However, generating the money is only half the battle. If that cash remains stagnant in a standard bank account, its value will be eroded by inflation and bank fees over time. Selecting the right investment vehicles is a necessary step to protect your earnings and benefit from long-term compounding. Click the video on your screen right now to see 3 specific ETFs that provide broad market diversification and have a history of resilient performance. Protecting your capital is the final, ongoing requirement for maintaining the financial foundation you have just built. Let's look at those funds now.